Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to Sound Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi Mel, how are you doing today? And how's the week in the office?
Hi, Peter. So it's a good Friday. We've had an eventful week in the office. It's been a rainy week as well, but it's been an exciting time watching a lot of political and economic events all over the world. How about you, Peter? I heard you traveled recently.
Yeah, it's a busy week, very busy week, and I had a couple of days in London with a lot of meetings, talking with potential investors to our funds and visiting large asset managers. Also, there was a sort of half-day conference at a US very large US asset manager. So yeah, there's a couple of takeaways from that one actually. But otherwise, just to highlight what we are going to talk about today. Um, there's a small piece on the Japanese election, Mel, and as mentioned, I have a couple of takeaways from the conference I went to the other afternoon. Of course, we go a bit deeper into the Chinese stimulus package that really sent up the stock market in China this week. And then this week we also had sort of the first hints from the new UK government about what sort of kind of policy they will pursue, and that's of course interesting. And as always, in the end, we will have just a few minutes on our sort of global outlook on the financial markets. Are we happy, nervous, or is it sunshine? Yeah. So let's jump into to Japan. What do you say?
Right. So actually very fresh news coming from Japan. Um, there's been an election within the ruling Liberal Democratic Party, and they have just chosen in the last hour, where since we've recorded, that longtime banker and defense minister Shigeru Ishiba is gonna be their new prime minister, and he assumes office next week. So it's an exciting time for the Japanese economy. Apparently this guy has vied for the prime minister's seat for the fifth time already. Apparently fifth time's the charm for him. So it's a lot to watch out for in Japan, where growth has been very hard to come by in terms of the domestic economy, because consumption is very low. Export market is kind of weak since there's weak global demand as well. Um, it's also a new phase for the party since the current prime minister, uh, Fumio Kishida, this suddenly decided just a few weeks ago that he'll be stepping down, and the country needs a new leader. Um, there's also a lot of challenges geopolitically. The incoming prime minister's entry is much awaited since, yeah, defense has been his thing for the longest time. So a lot will be discussed about how he's going to navigate Japan's relationships with the US, with China, with South Korea, with the South China Sea, for example. And of course, economic policy. So Japan has been struggling to revive growth. Inflation is kind of low but rising, and then they also want to keep wages up. The new prime minister is apparently known as a critic of the former prime minister Shinzo Abe, who's popularly known for Abenomics, right? So
Yeah.
it was a good branding as far as economic policy is concerned. We'll see if he'll have his own, I don't know, Ishibanomics probably, or yeah. So it's a very exciting coming month for Japan. Will this affect Japanese appetite towards Japanese investments? We're not sure. Surely there'll be a knee-jerk reaction. So far, the market is up, but not necessarily due to the election. But um, as far as investors are concerned, it's a wait and see mode about what his economic policy will be, what reforms will be undertaken to bring Japan
Mm.
out of its slump. So yeah, exciting
Uh,
times here in Asia.
yeah, certainly. If he's on the defense case, then he has enough to do. Yeah.
Mm-hmm.
But as you say, let's see if he comes up with sort of stimulus. So we're a bit on hold.
Mm-hmm.
Yeah. Otherwise, this week, as mentioned, I went to a conference in London with a big US asset manager, and
Mm-hmm.
of course, they're always interesting sorts, but they're so-called keynote speaker, and he's actually also in the strategic advisory board.
Uh-huh.
Uh, he gave sort of the outlook globally, and I would say sort of their position is what I say very mainstream actually. And I see it as a picture of how the market is positioned. If we look down through all the news, what we see today and during the week, this is actually why I see is priced in the market. There's no extremes price in the market. There's no over nervousness.
Mm-hmm.
There's not an extreme bullishness either. Even we are seeing S&P sort of moving towards a high every day. Yeah, it is not that people are sort of over bullish. It's just the world is actually still functioning. But
Mm-hmm.
he pointed at one thing, and that was where I say I agree very much. That where the most capital will come in is actually where you are, well, in the ASEAN area. I saw that as a very cheerful, yeah. And we completely agree here in the company. So
Yeah.
the very large asset manager and the humble long-range capital, we totally agree. Later on the day, there was a lot of focus on actually alternative investments
Yep.
and also exactly that investors are increasingly looking for this kind of different investments
Mm-hmm.
just in the private market, what we call it, non-listed papers. And that is here, from our perspective, also extremely interesting. And we agree this is one of the ways to search for new returns the next 3, 5, and 10 years. It is in particular in Europe, actually, where we see the European stock markets having, let's say, difficulties. But
Mm-hmm.
there's a lot of things going on in the European economy. There's a lot of good truckloads of good companies to invest in. They might not just meet and then come to the listed stock markets. So these were a couple of takeaways, of course, where I agree. Um, yeah, nothing more
Yeah.
than that. We It doesn't change our world. It more, how to say, confirm for
Mm.
us that we move on and do more of what we do.
Right.
That's basically it. But in your region, Mel, in China, it was a big week. Yeah, let's
Right.
jump into it.
Right. So actually, China has seen quite a series of events in the past 2 weeks. So we know that the Fed has cut its rates just a week ago. And then apparently the Chinese market players were expecting that the Chinese central bank would follow suit with a cut. But that didn't happen that week. Until last Tuesday, the People's Bank of China actually unrolled their own stimulus measures, and it was different from what was initially expected because they didn't
Yes.
touch the loan prime rate, but they virtually touched every other tool that they had. So there was a
Okay.
cut in mortgage rates, a cut in down payments for new homes, a cut in
Mhm.
the 7-day repo and bank reserves. So it's quite a move. And also, I think it's a very good timing since market sentiment was declining. And then suddenly there was a stock market boost because of the Fed. And they doubled down on that with this stimulus. For the past few days, Chinese stocks rallied by about 10%. Some indices were up by 12% versus last week, particularly because of these measures. So all of this is expected to lift consumer sentiment in China, where their growth target is 5% this year, and it's looking like it's unattainable. But
Yeah.
maybe with the stimulus, they can save the day or the year rather. So
Yeah.
very interesting times here.
Yeah, it's significant.
Yes.
The index we like to look at here at Longreens, it's traded Chinese stocks in Hong Kong, and it's called HSCEI,
Yes.
and that's sort of, you call it sort of a Chinese red chip index
Right.
for stocks listed in Hong Kong. Not Hong Kong companies, but predominantly Chinese companies.
Fine. Yes.
And it's how we also where we measure our fund performance against that one. That is actually for this week up 14%. 14%. And that is, of course, in local currency, but anyway,
Hmm.
that is about as dollar has been trading fairly sidelined. So that's a lot, and we need to notice two things. I think it's very often also if we look back at the past 20 years maybe, when China has published stimulus packages, very often we just seen maybe one or two positive days on the stock exchange,
Uh-huh.
and then it sort of faded out or lost the gain ground or whatever. Yeah. So this is a bit different. They are dealing with the
Correct.
real estate sort of sector, um, the challenges. And secondly, I consider this move in the stock market this week. Also, it's because it's where international investors are very active is in Chinese stocks listed in Hong Kong. Yeah, and this is also a sign that people have been they are heavily underweighted in Chinese stocks.
Okay. Yeah.
A lot of international investors are maybe not even positioned anymore, despite the large economy that China represents. So that was a bit of, I think people maybe caught a bit there, being too under invested. And I don't know what you say, Mel. So could this spill over to the what we sort of have discussed for a long time about other people also discussing the consumption in China? Also, will it help on the consumption, or is it more the real estate market?
Right. So the the series of stimulus that's been included since last week, it's apparently expected to help up to 50 million households and add trillions of yuan to the liquidity. But it's always a question of what will the people do with the additional money, right? So borrowing is cheap, sure, but will they really borrow to spend more? I forgot to mention that it's the stimulus actually came in with really good timing. So they're entering a week-long holiday, beginning Tuesday.
Yeah.
So it's their
Yes.
national founding anniversary celebration. So this just might be the trigger that people need to, okay, I'll spend more over the holiday. I'll travel around
Yeah.
China. So that's the optimistic outcome that the government probably wants out of this. And of course, since the markets will be closed, the stock markets will be on a closing on a high note,
Yeah.
literally. So yeah, the question really is how fast does this stimulus reach its people? And there's not really a lot of room to cut interest rates per se in China. So this is what they have to work with. And it must work. Otherwise, they're going to be, very limited in terms of their options. And if this is the trigger that they need, maybe it just might work to, chase after growth in the last few months of 2024.
If we should say something, as we definitely like this kind of stimulus much more than if it's just
Yes.
public spending, building more railways and bridges and whatever. Um, this is this is a bit more into also dealing with one of the core problems in that the Chinese economy is facing here.
Right.
But that's well known that the whole real estate sector is so to say bad at.
Mm-hmm.
Um, and then the as we would of course prefer also some. direct support to the households in terms of
Right.
the hope that it leads to spending. We're fully aware that Chinese they are savers. They save money, so they even if they get them, it's not necessarily that they spend them. But anyway, this is a bit it's a bit exciting actually, and
Yeah.
I think despite we have generally been bullish on Chinese stocks this year,
Yes.
uh, this also the effect this week, the effect on the stock market has taken us by surprise, to be honest. If you had asked me Monday this week, I think
Yeah.
none of us would have said this is so much in plus. You say, okay, fine. If we knew it was coming, it would give a happy day with 5% in plus, as it usually do, and then we see. But this is a bit more significant actually,
Right.
and worthwhile to notice also. How much? I have a question, Mel. Sort
Sure.
of the now we are jumping to Europe to UK,
Ah,
but
yeah.
sort of the change in UK government and the election of 4th of July. So has that is are people noticing that in Asia at all?
Actually, no. A lot of the attention has actually been on the US. The upcoming presidential elections in the US is in about a month.
Yeah,
And yeah, the attention's really been there, especially that the candidates are really on opposing sides of the political spectrum. And it's been a relatively quiet as far as UK news
mm,
about the elections is are
yeah,
concerned, but it's quite noteworthy, right? Because a long reigning political party has been toppled by the Labour Party, right?
yeah. Yeah, so we spent some time on it here today because
Mm-hmm.
it has. I would say if we look into, for example, a global assets allocation, in particular, how to allocate stocks into different markets, it could have I would say, at least in some importance for how the weighting in the European allocation would be,
Mm-hmm.
and that's why we sort of take it up here. Um, and as you say, yeah, Labour won. Everybody knows that in the summer holiday. But the other day here, the past days, is earlier this week, was the first convention that the Labour Party
Yeah.
held after the election, and also basically the first true sort of presentation of where they're heading with their politics, economic politics, and so. And so it was quite interesting. So far, there have, of course, been different hits, but not a lot. So what they have said, they have spent some time on looking into what the heritage, and honestly, it is we know how the sort of chaotic earlier governments have been in the Conservative Party,
Uh-huh.
and also much higher debt, and that was due to the COVID-19, like we saw in other countries. So UK is actually balancing a bit on an edge. The
Right.
country cannot allow itself to increase public debt a
Mm-hmm.
lot more
Mm-hmm.
because it is high. Um,
Correct.
and UK is standing a bit more alone, yeah. So they need to have the financial market's confidence in the
Right.
prior government or conservative ruling days. They proved what it means to lose the face of the the financial markets, and it went the government bonds went straight down in the black hole, yeah, within just a few days.
Uh-huh.
So it is a bit balancing, and also internally in the economy, the tax rates are at the highest they've seen sort of historically. So they can't really tax a lot to bring down the government deficit and so, yeah.
Right.
So it's not so easy. And on top, then actually even the new PM Prime Minister has sort of been involved in a bit of a lot of troubles about receiving donations that didn't really
Uh-huh.
went into to the party, but went to buy new clothes and so. So
Yeah.
it's been a difficult start. So all in all, interesting to see. But what they have hinted is that they will try to adjust basically fiscal rules
Mm-hmm.
uh, to boost investments that should support the economy. Also, they have a focus saying, okay, it is not to boost the day-to-day spending, i.e., just
Mm-hmm.
handing out more sort of money to. They have a salary discussion for some part of in the public sector, but it is more to boost investments that could support the further growth in the UK. An example is sort of within the what we call the green area, where they will try to keep spending at a decent level, also to boost that area and move the British society forward and the economy forward. We will
Right.
learn more about that on the 30th of October,
Uh-huh.
when the government is proposing a bit more in detail what they are up to. But it is interesting, and
Mm-hmm.
despite all the problems and the troubles that UK sort of are facing and we talk about, it's still a growth economy. OECD has just released a new forecast saying that UK will grow with around 1% this year, and again sort of a same like next year. And that is, after all, better than the continent, the Eurozone, and particularly if you compare to Germany, that is in a sort of a negative growth area, and next year will be very flat.
Mm-hmm.
So all in all, if we should conclude and say, what does it mean? As what are the first signs? We have a sort of long-term positive standing to the British economy, and we favor it a bit over the Eurozone, particularly because we see the southern part of the Eurozone as basically uninvestable, and growing troubles for a country like France.
Mm-hmm.
Germany is also heading towards more trouble and not less trouble. And there we still see another capability in UK to deal with the challenges and still keep some growth. On this note, basically, we conclude and say, okay, we we still like to favor a bit of UK stocks in the European allocation weighting, and so we overweight a bit there and underweight a bit, particularly the Eurozone. And it's not that there's any sort of uh, strong performance in the back so far for the UK government. As in stock, the FTSE 100 is, let's say, up 1.5% during the 3 months period, where the German DAX actually is up 5%, and so is the S&P.
Mm-hmm.
There is a chance to allocate into to UK still. We see also in the sort of the mid-sized companies. So this is our sort of the main conclusion here from from Europe on that note, that there is an upside opportunity. Actually, I see it, and net. Do you have any sort of comments on Europe from an Asian perspective? What is the highlight you see if you see any headlines there about Europe?
Like many other developed economies, even in Asia and as well as in Europe, public debt levels are really a cause for not alarm, but it's really something that economies must watch out for. You were right. I remember reading about the new Prime Minister Starmer's saying he wants the UK to borrow to invest. So that's kind of
Uh,
what do you call it? I'm not gonna call it scary, right? But
uh,
maybe it's hard to navigate since their budget deficit is already, or sorry, their debt to GDP is already close to 100%.
yeah,
So uh, big economies like the US and Japan are known to operate at a wide deficit, but the goal
yeah.
really is to bring that lower, not higher. So there's that warning for everybody.
Yeah, so we it's more the trouble zone here in Europe, and for 30 years back it was more in Asia, yeah. But times
Yeah.
changes, and yeah, so it is. Otherwise, let's jump to the final global outlook on risk and how we see the markets. Any reason to change anything? What do we say about what do you say, Mel? Are we happy or concerned?
For my side, for Asia, I think we're very happy, happier now than previous weeks, probably because of China's stimulus package. So it has done its initial job of perking up interest towards this part of the world, especially towards Chinese stocks. We maintain our position, our long-term position that we really like growth. And we see it here in Southeast Asia or in East Asia, and support is definitely needed at the time when Chinese domestic demand and therefore global demand is depressed. So this is a very welcome development, and we maintain our position, our optimistic position towards the region. How about our view towards Europe, Peter?
Yeah, as a sort of in general, also to reach about in a global perspective. Yes, I agree. As we like the overweight into equities, we like risk, so to say. We're happy for being in longer durations in bonds. We're happy for having emerging market debts on board, particular ASEAN government debt, as something outspoken. And so we are still happy with risk. Should we sort of signalize that we do also see, and what's the news? We are fully aware that as a what you call geopolitical risk are a bit on the rise still.
Right.
We of course fully aware of what's going on in the Middle East,
Mm-hmm.
and are the tensions increasing? Yes, they are. But on the other side, there's also something that doesn't happen. And that is actually, it could have been, the tension could have been much more escalating than they are. And some of the very big and heavy players in the Middle East, we reckon and we argue that they are actually trying to downplay the crisis and working behind the scenes and really try to see if the dispute and warlike situation between Israel and Hezbollah and Hamas can be played down. So that is actually another sign that is not only going one way, it's not only a one-way concern.
Uh-huh.
We actually see, we reckon and argue there are some efforts done to, um, yeah, to try to dampen the negative effects and
Mm-hmm.
any sort of further fire. So on that note, we stay happy with the global markets, and great to have the conversation with you, Mel. Thank you.
Thanks to our listeners too for tuning in.
We will be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Lundgren's Investor Insights. Thanks for tuning in. For expert insights on the go, download the Lundgren's Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated mutual China fund. To know more, visit lundgrenscapital.com.